In an era defined by information overload, artificial intelligence, and persistent geopolitical friction, the signals of systemic stress have become both louder and more difficult to interpret. The recent analysis offered by Canadian Prepper in the video, "Alert, Bad Things Are About to Happen," argues that two intertwined crises, an extreme equity market overvaluation and an intensifying multipolar conflict centered on energy, are approaching a breaking point. The speaker contends that the combination of historically elevated valuations, elevated sovereign debt, decelerating growth, and deliberate strategic ambiguity makes a significant market correction and further escalation of global tensions highly probable in the near term. The economic case begins with the Shiller cyclically adjusted price-to-earnings, CAPE, ratio. This metric, which divides the real price of the S&P 500 by the 10-year average of inflation-adjusted earnings, has climbed toward the extreme levels last seen at the peak of the late 1990s technology bubble. In the present environment, the ratio sits near or above 40, approaching the prior all-time high near 44. What distinguishes the current episode, according to the analysis, is the deteriorated macroeconomic backdrop. Debt to GDP ratios far higher than those of 2000, trend growth markedly lower, and the simultaneous existence of active great power conflict. Corporate buybacks remain aggressive, yet underlying fundamentals appear increasingly detached from price. Parallel moves in gold and sharp gains in certain technology names linked to surveillance infrastructure are presented as early signs that stress is already appearing at the margins. The conclusion drawn is straightforward. Valuations at these levels have never been sustained indefinitely, and the present combination of leverage and external shocks makes a reversion more rather than less likely. Layered atop the valuation concern is a diagnosis of pervasive, strategic deception. In a world saturated with sensors, satellites, and instantaneous information flows, pure secrecy has become difficult. Consequently, actors must rely more heavily on mixed messaging, controlled leaks, and narrative management to shape adversary perceptions. Official statements, anonymous briefings, and reports framed as private meetings are treated with particular skepticism. The presence of the word official itself is offered as a potential indicator of psychological operations. The speaker applies this lens to recent U.S. signaling toward Iran and Russia, arguing that public expressions of restraint or negotiation may serve to mask preparations for continued pressure or to induce complacency among opponents who can observe force posture through third-party satellite systems. Concrete flashpoints receive detailed attention. A Russia sanctions measure advancing through the U.S. legislative process would authorize steep tariffs, potentially reaching 100% on countries that continue to purchase Russian oil. Because China sources a substantial share of its crude from both Russia and Iran, such a step carries the capacity to transmit economic shock rapidly into Asian markets and by extension into global risk assets. Simultaneously, the Strait of Hormuz remains a zone of active disruption. Reports of vessels on fire continue, even as diplomatic channels discuss corridor arrangements that would grant Iran and Oman roles in managing inbound and outbound traffic, possibly including transit fees. The analysis regards these proposals with suspicion. They appear difficult to reconcile with stated U.S. positions against Iranian tolls, and with the observed reduction in Iranian tanker activity at key terminals. The broader energy picture, declining strategic petroleum reserves, constrained transit through adjacent waterways, and competing demands from data center growth and emerging market consumption, suggests that any sustained interruption would rapidly alter price dynamics and inflation trajectories. Taken together, the market and geopolitical threads point to a period of elevated fragility. The speaker does not claim perfect foresight. He acknowledges genuine uncertainty and the difficulty of distinguishing genuine negotiation from theater. Yet the pattern of extreme valuations coexisting with expanding conflict, combined with incentives for narrative control, leads him to the judgment that this can't continue. The practical response advocated is not panic, but disciplined preparation, building household resilience through food production, inventory of essentials, skill development, and realistic assessment of personal exposure to conscription or urban disruption. In this framing, prepping functions as a form of self-imposed sanction, an acceptance of constraint in the present that purchases optionality against future disorder. Whether the anticipated correction arrives within weeks or stretches longer, the underlying vulnerabilities identified, valuation extremes, energy choke points, and the erosion of transparent signaling remain material. The video's central warning is therefore less a precise prediction than a call to clear-eyed observation. When official narratives proliferate and systemic indicators flash red simultaneously, the prudent course is to treat the possibility of rapid deterioration as real and to act accordingly.